Thank you for joining us at XM.com for today's market comment by Rafi Boyadjian. I'm Maria Pashurdes. The Federal Reserve left interest rates unchanged as expected on Wednesday, but struck a somewhat more dovish tone than anticipated, spurring a powerful rally in bond and equity markets. In a marked shift from his previous stance, Fed Chair Jay Powell pointed out that FOMC members are no longer writing down rate hikes, claiming, "That's us thinking we've done enough." Following last Friday's slightly hotter than expected payrolls report, there were doubts as to the extent of any dovish lean. But Powell acknowledged for the first time that rate cuts are now coming into view, and this was underscored by the updated dot plot that showed Fed officials penciling in a total of 75 basis points of cuts for 2024. Stocks on Wall Street jumped higher on what appears to have been the dovish pivot that markets had been waiting for. With growth slowing, inflation on the way down, but a labor market that's yet to crack, the U.S. economy might just pull off a soft landing. For equity markets, this was the best outcome they could have hoped for. The Fed has now likely triggered a Santa Claus rally that looks set to put stocks on the front foot at the start of the new year. The Dow Jones shot up 1.4% yesterday to close at a new all-time high, while the S&P 500 wasn't far behind, coming within 2% from its record high. The sharp drop in bond yields, not just in U.S. Treasuries but globally as well, fueled the risk-on sentiment, but was anathema for the U.S. dollar. The 10-year Treasury yield has plunged below 4.0% for the first time since August, pulling the dollar index to 4-month lows. The euro is heading for its third straight day of gains against the greenback, climbing above $1.09. However, there is a risk that it could come under pressure if the ECB makes a dovish pivot of its own when it meets later today. The pound's uptrend is also questionable following this week's poor UK GDP numbers, although what's different for the British currency is that the Bank of England will probably be the last to begin cutting rates. The BoE is expected to keep rates unchanged today and will probably reiterate its higher for longer message. Thanks for watching today's market comment here at XM.com.